Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 14th of May, 2020. This is episode number 1755. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk-off sentiment continues after a second day of selling yesterday in the indices and across the board this morning. Crude's a leader. Crude popped higher on the inventories report, but ended up finishing lower on the day yesterday and recovered this morning as it pushed through a relatively significant high to the next reference high, which is in the 2681 area. That's crude's highs in that zone there. Let's see, crude. Where are you, buddy? 2675 on the June contract. The laggard today is the Russell. The Russell's off 3% almost, down 36.3 points, trading at 1193. The Russell's come off a couple hundred handles in the last couple days. Euro stocks are the next weakest product, down 2.83%. The DAX down 2.77%. And the Dow is down 321 points this morning with 1.3% down. The S&P is off 29 points, 21 points or 1%. The Nasdaq's off 72 points or 0.8%. The strength in the markets really has been the Nasdaq so far, and of course, after all the selling, it had to give up some of its gains as well. The 10-year notes up 6.5 points. The bonds, the U.S. bonds, are up over a handle and 7 ticks, up 0.66% in futures pricing. So that's where we stand. Clearly, risk off. And there was yesterday was a bit of a lengthy trader bite, and in it I sought to describe the action from Tuesday coming into yesterday, describing it as an impulse down with a very high probability of continuation lower, and that's what we got yesterday. Yesterday played out pretty well in terms of scenario one. We'll go over that here in a second. This morning we did have some key releases hit the tape. Initial claims came in at 2.981 million, was expected at 2.45 million, consensus at 2.5 million, so it's slightly worse. It's about what is that? About 20% worse or something. The continuing claims number came in slightly better. With the consensus was 25.1 million, came in at 22.833 million. Import prices in the U.S. also slightly better year on year, negative 6.8 versus negative 6.9 expected. Export prices negative 3.3 versus 2.6 expected, slightly worse. Looking ahead, we have really ECB's Guindos speaking at 11 Eastern. Fed's Kashkari at 1 p.m. And then Fed's Kaplan at 6 p.m. this evening, and we have a slew of numbers out of China at 10 p.m. Eastern, and that's really what's on deck for today. Not much else going on there. Let's move on to the review segment. This, if you recall, if you were here yesterday, the expectation is for the market to open and push higher. The expectation is it would likely push into that 76, 75 overnight, but at least 73 and a quarter is expected. And then I expected the market to roll over and push lower. The target lower, I was conservative with about a 30-point range to push us down into 28.44 or so, but that was very conservative. Not only did the market not push high enough, it did not push high enough but it ended up pushing a lot lower, right? It ended up getting into the 2700 handle, which is this has happened pretty fast. The expectation, and I know I talk a lot about a lot of things. These things are 20 minutes a day, but um, I did talk about the potential for if there is a failure, and I expected it around that 62% fib from the all-time high to the March low. Um, and I talked about if it does roll over, we're looking at 2750-ish, 2745-ish as a big swing target below, and we're kind of making our way down there. So here's what happened yesterday. Actually, let me try to show it in the Renko. It's funny. Yesterday, I decided to switch my Renko charts from 4 to 2 ticks in response to the lower volatility, and had to switch them right back as the 2 tick was creating a lot of noise. So very briefly, we open up and we have this small opening swing here between 54 and 60.50, 54, 50 to 60.50, and it looks all orderly, and we get this push down immediately. So we're looking at scenario 2 right off the bat, and then it walks itself back up. This was not fun right here. Walks itself back up, breaks through the opening swing high and pushes to 68.75. So now it's looking at like scenario 2. And it actually looks like, at this point, it looks like it has tested, very clearly tested and rejected below the prior day's range. Those who are not familiar with my charts, this green line marks the prior day's low, and the orange line marks the prior day's close. So here's P low, Y close, Y low, Y close, the opening price, and so on and so forth. And so what it looked like to me is we exploded downwards in a nice impulsive move uh, below the prior day's range. So the expectation is we are likely to push into the mid, rotate over, and look for a break of this 32.75. That was the initial short that's set up. And then from there, a continuation lower, which gives us basically scenario 2. And instead, it chopped around and it pushed higher back into the range. And then in an explosive impulse move up, and then we get an impulse move down. So now it's just like, now you got to throw your hands up in the air and say, what is going on with these people? Clearly, bargain hunters came in throughout here and bought the prior low, below the prior low. We're looking for responsive buying, and it just failed with an impulse back here, and then we get the mid trade against VWAP, against the stock zone, against the prior low at 50.75, and this was the prime trade location for yesterday. Results in an impulse. This happened very quickly, by the way. The zipper that was formed in creating this little trade was very, very short-lived. And so this creates an impulse, pushes us below the IB low. So the first hour's up, comes back 39.5 versus 40.75 low. Doesn't even push into this little zipper here well to give it another opportunity. And then from there, it just becomes a bit of a trend, another continuation impulse with a continuation below that, and then from there we have balance. And what we established yesterday is a very Gaussian, very balanced. So once we moved below the IB, we had a very, very clear value area with limits at the 24 stock zone here, below the mid, below the IB. So this whole region right here is important between 24 and 29. And keep a very close eye in this region. It's going to be marked really well on the stock zone levels. I suggest you keep an eye on this area. You note that the overnight high happens to coincide with this key low volume node right here. See that little notch out in the profile. And so the market accepts and walks itself back. I mean, look at this market walking itself back. 97 comes back to 97, builds this little zipper, takes off. The zipper highs at the 2805. There's a 2805, and then it settles in. It pulls back to 2804.75, continues higher. The next zipper high is at oh 06. Sorry, it was 10 quarter or 9 quarter, and then it pulls back to 8 half and 9 right here. 9 right here before it closes. Very, very orderly push higher. This was a beautiful kind of stair step higher, one time framing on a very short time frame back into 2810. 2810 is our point of control from yesterday. It's the most accepted price of the day. Again, the value area is very clean and clear from last night with a delineation here at 25 all the way up to 29. Keep an eye on this area. The overnight session builds an overnight point of control right on top of yesterday's point of control, 2808. This is the auction working and accepting that with current conditions, value is really being built in this region here. So we're going to keep an eye, a very close eye on this 2810. So what am I talking about here? 2810, 2808. Keep an eye on that. Keep an eye on 25 all the way up to 29. That's basically what I'm getting at. These are key areas that are expected to get a response on the way up, and we are trading down here. The current S&P minis trading at 27.89 currently. So we ended up yesterday with a neutral extreme low, but it didn't really close on the low, but it did close outside of the IB. So it's a neutral extreme low with an indication that we are likely to continue lower. And that we did. As we look at the overnight session, given the neutral extreme stance of yesterday, again, neutral because we pushed the IB high and then we broke the IB low. We finished below the initial balance in the lower end of the range. And so we expect the market to continue lower. And so and we got that we got that in the overnight session. Actually, we just got it about an hour ago where the market just kind of walked itself down here. This is a 15-minute chart, and this move down here has some really good participation, by the way. Look at the delta. I mean, it's gotten some good hammering going as it's pushing down. I'll go over that on CT Bookmap to show you what that looks like. You can see that volume is coming in. And this is really tied into the fact that we were getting the initial claims right here. The market's kind of leveling out before the important initial claims and continuing claims numbers. So that's where we stand. Okay, I need to readjust the broadcasting software. It's just refusing to accept this, my monitor to the left. But here's CT Bookmap. Here's CT Bookmap. We are, this is, let's look at the entire session. This is CT Bookmap running on Rhythmic, which is my trading feed. And in my opinion, the best feed out there right now. Here's the overall play, the overnight session. Here's the open at 5 o'clock Chicago time. We start off, restart the day at 0 CVD, volume delta. We attempt to push higher, and we just continuously dig deeper and deeper and deeper with every swing down. This looks like we're getting some play here. We've got a nice positive delta pushing here, but it encounters some liquidity that was not resting, it falls back off, and this area right here is quite noisy in the overnight session. This encompasses the European Open all the way up through to this sell-off. But let's take a look at the sell-off here in detail. Let's open this up a little bit. Here's what we see in the sell-off. It's kind of obscured here. Let me see if I can enhance. These are delta bars. Okay, this is delta volume, not the volume of these dots. It is actually the volume of these dots, but they're it's delta volume. And what we see here is the market really getting hammered as it pushes lower. So as the market kind of swings lower, you can see an acceleration in these red dots and red delta. And it just continues, and it gets, as the market pushes lower, it gets more and more and more aggressive. Here with the initial claims, we got a nice spike. This is initial claims right here. And really, it's hammering through whatever liquidity happens to be resting in the book. Let's move those out of the way and crunch this down a little bit. And you can see as that this liquidity comes in, it heats up, right? It's comes in kind of cool, and then it starts to glow, and it rides right in, and it ends up getting crushed somewhere in here. We don't see where it actually trades, but this liquidity does actually trade through, and we have more of it down below. So as the market is pushing lower, it is filling these bids, which could be exits on the trend down. All we care about is that somebody is buying this thing by offering up their liquidity. Generally, these are I can make a very, very strong argument, and I'll never know unless I take a peek into the CME's matching engine. I'll never know what people are doing, if it's an opening order or a closing order, but I would suspect that these are closing orders. From our perspective as traders looking at order flow, we just know that somebody's buying this area, whether they're buying it to close a short or buying it to initiate a long. We simply have to distill it down and not get caught up with that discussion. We simply have to look at it as demand. It's demand down below. And in general, the market moves into those liquidity areas because it is potentially smart money, and it's the areas that it wants to get out, and that plays in the direction of the trend. So this liquidity here will be interesting this morning between 27.75 and 27.70. It's been resting there. And then beneath there, 2760, which was below yesterday's low. These areas I expect the market to really tangle up with. And given that we've had an impulse down on Tuesday, we've had a continuation yesterday, which did not create a bigger impulse than Tuesday's. I expect that today will be a basing day. It's likely to be a basing day. And all my argument is this liquidity over here may help create that environment. Okay, so let's take a look at what's expected for today. So I'm going to show you. See, this is the impulse. Okay, this is the big move. This is the pullback and continuation. This generates, in a shorter time frame, generates its own impulse, which has its own pullback, never tags 50% here on the pullback, and then has a continuation with a lower low that is just mildly lower than the prior low, 27.92.75, 27.86 in a day session. These charts, by the way, that you're looking at, unless it's the overnight chart, which is a 24-hour chart, the 24-hour chart, it's I only look at RTH, so you can see the timing here. This is Chicago time, 8:30 to 3:15 for the pit, just so I can filter out what happens overnight when the stocks are closed. But you can see that this pushed, pulled, and then created a lower low by a very differential amount, small amount, whereas the prior session really had an impulse and a squeeze and a trend, and then you can see that the delta was right there. These guys were really selling, whereas yesterday, let me switch a color, whereas yesterday it moves lower on relatively okay delta, and then it consolidates here. Delta continues to kind of squeeze lower, but then when it makes this lower low here, it's pretty much stabilized. The selling is pretty much stabilized, and we have some pretty decent buying delta into the close. You can see that the volume came in here on the buy side into the close. So I'm seeing this as a potential early sign that the market has moved to a point that is that may create a day for finding that low. Here's the open right now. The yellow line is the last. We are right against yesterday's low. The expectation here is we open in or out of range. I'm expecting a quick response, looking for a quick response back into 2800, consolidate. I'm expecting a squeeze into 2808 to 2810 before it sits sideways. I'm looking for a dip after that, 2777, potentially 60, 2765, 50 or so. And then for us to come back to this high volume node and finish in yesterday's range. And that would create the kind of foundational or base day for the session. It'll give us the lower low, but it is likely to start finding its low here today. Secondary is an open that squeezes lower right away into the overnight low. The trend was down into the overnight session, as you saw, on pretty good volume. And then I expect an impulse back into the range that squeezes into this 2810, 2808 area and starts walking itself to this 2825 and then consolidating in this area, finding resistance in this 25 to 29 area that I talked about earlier for a hold. So we get the lower low and we get the day that finishes in range, accepting value and probably the point of control holding steady in that 2808, 2810 area. These are the two main scenarios for today, given the context of the auction and what we've done so far. So there's scenario 3 and 4, open test and drive and so on and so forth. But these are the key kind of expectations for today. We'll see that, look, I'm not here to predict and draw lines on a chart and say, look what happened, look how correct I am, although that's what it seems like. I get it. It's kind of an unorthodox way to look at trading because it seems like I'm forming a pre-market bias and locking myself in. That is not what is happening. That is not what's happening. Those of you who've been watching a while, I've talked about this a lot. I really need you to make the distinction between understanding what is likely to happen and drawing these lines and what the market actually does. I cannot sit here and impose these lines on the market. I'm really much more interested in this gives me a path or a pattern for when the trade is on to hang in there, right? It gives me kind of a visualization, and this is all this is. It's a visualization exercise. It gives me an idea of what might transpire so I can hang in there once the trade is put on. People tend to spend a lot of time forming a bias. They spend a lot of time reading order flow, whatever, taking a trade, and then immediately closing it because they don't have a path. This is like a military exercise or a pre-battle briefing where we know that anything can happen in the field, but if we have a path laid out ahead of us, all we have to do then is see if the market's agreeing with that path and hang on to the trade. So 2808, 2810, 25, 29 above. And then of course, if it pushes well above there, then we're looking at 2850, the close of Tuesday. Below there, below here, we have the overnight low, which coincides with the stock zone at 79.65 And then the big level is down here at 2735. 2735 represents a high volume node on the composite. And then the 65 or the 56 is a low volume node on the composite. So these are the key areas with an intermediate stock zone at 48. So these are the areas that you'd have to watch for tomorrow. Again, I invite, whoa, we've gone way long. Again, I invite you to take a moment and take a look at edgeclear.com for brokerage and clearing. This is a firm that I started last month, and I'd like you to take a look at it and offer your support. Very competitive commissions and an award-winning team. We're building up very well for the first month, but I would appreciate you at least giving us a look-see, maybe getting on chat with one of the experienced brokers. Take care.